Hi everyone, it's Lisa Dean, Realtor and Accredited Staging Professional with Sarcia Realty Group. Today I am with my friend Joe Sarcia with Today's Home Mortgage Company out of Stoneham, Mass. Thanks for joining us today.
Thank you for having me.
You're very welcome. Joe's going to be going over a couple of things with us in terms of the difference between pre-qualification versus pre-approval. As well as the differences between the different loan programs involving FHA, Fannie Mae, as well as Freddie Mac. Joe's company he's been in the business for over 17 years now.
17 years, yeah.
Right? Unbelievable. So obviously he handles residential loans for condos, single families, and up to 4-family properties. So, Joe, if you could take a quick moment, why don't you talk to us a little bit between the difference of pre-qualification versus the details involving pre-approval and why that's important.
Well, typically when people call us to do a pre-qualification, it's just with a phone call. So people can call over the phone, you don't have to show up, and you can go over the income and the assets to give you a ballpark as far as what you can afford. Okay. A pre-approval, it's a little bit more involved. It's getting the tax returns, the pay stubs, and the bank statements. We send it into the lender, we pull the credit, right, and we give a hard copy number as far as what the consumer can qualify for.
Great. Excellent information to know.
Makes it a lot easier.
Right. All right. Well, interest rates, as we know, have the opportunity to change daily. So is there any way you can talk to us a little bit about the differences of an FHA loan as well as Fannie Mae and Freddie Mac?
Well, we, as a mortgage company, arrange loans. We don't make them. So the difference between Fannie Mae and Freddie Mac and FHA are two different avenues. Fannie and Freddie are one type of mortgage where the down payment typically is 5% down on a single family or a condo. As a multifamily, the down payment is greater, even if you intend to own or occupy it. FHA allows you to do a less of a down payment. It's 3.5% down. So those are technically the smaller differences between the two different avenues. FHA has a slightly higher PMI as opposed to Fannie and Freddie, but those are the quirky differences between the two.
All right, so Joe, what would you say is the benefit for our folks to come to Today's Home Mortgage?
Well, pre-approvals are free. There's no charge associated with doing it, so that's an advantage for the consumer. They don't have to lend out any money for that. Mortgage companies typically have better rates than banks. We all sell our mortgages to the secondary market, so usually, again, it means that the loan's going to be sold no matter where you go.
Oh, right. Good to know. All right, and also if you have any questions in case that you might be challenged, your credit might be challenged, and you need some options on how to improve upon that credit, please definitely give Joe a call. He can certainly point you in the right direction. Meanwhile, thank you so much, Joe, for joining us today and giving us some valuable information.
Thank you. Happy to help.
Yeah, excellent. And again, please stay tuned for some future showcase series. I am Lisa with Sarcia Realty Group again, and until next time, all my best and keep smiling.